Good afternoon, everyone. Hope you guys are having a great Sunday. Welcome to another live stream on TradeZella. For those who don't know me, my name is Numan Ashad. I'm a head trader at Blackline Trading. And today we are going to cover a very, very important topic, that is how to construct an A+ trading setup. The agenda for the session today, we are going to go through from the very basics, where exactly retail falls prey, where retail mostly loses a lot of money, going through the setup, what exactly is the setup to catch A+ trades, what are the strategies, what are the setups, and then at the third stage, we will go through some live examples, real case studies, real tape, no bullshit, real live auction. So with that being said, let's have a deeper dive. Just a quick check if everything is working fine. If you guys are able to see my screen, I'm just gonna quickly see if everything is looking good. Okay, I think that is looking fine. Perfect. Great. So first of all, what exactly is the core problem? The biggest problem when it comes to retail trading is that folks want to catch and trade every single candle, right? Let's say if there's a green candle, folks want to trade that. If there's a news red candle, folks want to trade that. So basically, trading what looks good. That's the biggest problem that that we have with the retail trading. You also start the session with a lot of biases, seeing patterns that are not there. There's a lack of structure, no defined process, and that's where the biggest problem kicks in, is that you make a lot of money. Let's say day one, you make a lot good money, day two, you make a good money, and then day three, you lose everything, right? And that happens because there's a lack of structure. There's no defined process that can be repeated over and over again. And of course, the last biggest problem is the chasing and FOMO. That is okay. Once again, the biggest assumption behind FOMO is that there's not going to be any other opportunity in the market, and that is just completely wrong. So these are just a couple of reasons that's why retail loses a lot of money. Now again, we are going to go through live examples, a live case study. Just stick with me in terms of how we can get a solution to those problems. So when it comes to day trading, and I've been trading for 7 years, whenever I speak about A+ trades, these are the core elements of my A+ setup framework. What are those elements? Let's have a deeper dive. So first of all, what I want to focus on whenever building an A+ setup is the trade thesis. That is why exactly I think that trade should work out. What exactly is the reason that I should go long or I should go short, right? So having a trade thesis gives you a lot of conviction in terms of the potential directional bias, right? Second major thing is the technical alignment. That tells you if my trade thesis that I made earlier, if that makes sense or if that does not make any sense. And the third is the live auction, that is basically confirms or rejects the two earlier steps that we just spoke about. That is technical alignment or trade thesis. Now again, if this looks very, very complicated to you, don't worry. We are going to have a deeper dive on each and every of all of these aspects at a very, very basic level. So let's just take it step by step. So first of all, trade thesis, right? Question become, okay, you say that you need to have a trade thesis, but how do you make a trade thesis? What feeds into a trade thesis? So those are the most important points that feed into a trade thesis. Number one, determining the context of the market, identifying the overall direction of the market. Is there some economic data that is coming? If you are trading a company stock, are there any earnings coming that I should be aware of? if there are earnings coming, what were the earnings? Did the company beat the earnings, or was that a miss, right? Most importantly, how was the forward guidance, right? Forward guidance is where companies tell you what they expect the market or their company performance to do moving forward. So all of those things feed into determining the context of the thesis, right? Second, again, why do you think that your trade should work out? Why not the opposite, right? And the third point is thesis formulation. Let me actually already open my Thinkorswim and just give you guys some examples, right? Let's just already go through some charts. Let's say that very good example. In fact, example from last Friday, Intel, right? Intel reported earnings, and Intel reported. Can you guys see my screen? Yes, perfect, great. Intel reported good earnings, right? Right off the bat, when the earnings came out, the stock was opened up with a massive gap up above the 40 zone and started trading above that 40 zone in the pre-market, right? Now at this point, when the retail is looking at Intel trade, everyone is looking forward to basically go long at the open, right? With the assumption that since the earnings were good, this stock will likely keep on going higher. If you look at the daily chart, also massive gap, US government involvement, and just kept on running like no tomorrow, right? Now, again, at this point in the morning, what is the thesis on this particular chart? What is the takeaway when it comes to formulating a thesis? The takeaway when it comes to formulating the thesis is that the stock did beat earnings. It is trading at the highs, but you also have to be aware of the bigger context that the stock did run massively from 25s all the way to 40s going into the earnings announcement, right? So you have to be sort of aware of why and how we reach this price at this particular point. So when I am making my trade thesis on that particular day, those are the things that I am looking at, right? Determining the context. What is the context of a price action until that point? If I am thinking of going long, what are the levels that I am paying attention to when it comes to going long? And then based on that, formulating the theses and scenarios on the day. I'm going to give you a very good example of thesis or scenario trading, right? This is a thesis building from two traders. Two traders, day trade, live trade, and this is their thesis. Trader one goes, this stock, for example, let's take Intel, right? Or ES, or whatever the case is. This looks good, it looks bullish, it will go up, right? So that is the entire thesis of trader one right off the bat before the market opens. Trader two goes, okay, market is holding higher low post CPI, for example. There's a clear invalidation at prior lows with NASDAQ trading higher and a rotation into the tech sector, right? Now you guys can clearly see the difference, right? The difference between thesis one and thesis two. Massive difference. Two traders, same market, same prices, but just a very different way to approach the market. And this is exactly what we are talking about here today. Whenever you are looking at a thesis building, you have to look from the bigger picture, macro picture, in terms of what is going on the bigger picture, right? If it is if you are trading S&P 500, for example, right? If you're trading S&P 500, this is that, for example, ES price. What is NASDAQ doing, right? Just a very quick example. Now this is where we are sort of touching the technicals of the price action. But for example, since NASDAQ adds 30% into S&P 500, what NASDAQ is doing is very important in terms of the daily price action on S&P 500, right? So that is just sort of technical alignment right on that phase. Number two, when it comes to the pillars of my A+ trading setup, this in fact, before actually we go to the technical alignment, this is the example of how I build thesis, right? This is my notebook from TradeZella journaling platform. And each and every single day before starting my trading session, I make a game plan. And this is an example of, for example, a good game plan. This is how I approach the market, right? On that particular day, the market is kicking off the week at all-time highs, reflecting strong bullish sentiment. There are no real data points coming on the day. So based on that, based on this just price action, I have two key theses, two scenarios on the day. Scenario one, for example, look above and fail. If the market bids this level, XYZ, whatnot, this is what I'm looking at. If the market fails to bid at certain level, this is what I'm looking at, right? Again, the idea of showcasing you guys all this is just to showcase you guys why and how important thesis building is, how important looking at the bigger picture, understanding what key events are happening on the day, if there's a Fed guy speaking, if there's some economic data coming, if you're trading particular stocks, if some earnings reports are coming, or any sort of specific conference that's happening or whatnot, why those things are very, very important to know when we speak about building a trade thesis, when we speak about trading an A+ setup, right? So that is the first pillar of my A+ setup. The second pillar is what I call technical alignment. And what is a technical alignment is that after you have your thesis built, you want to see the price, showcase you what your thesis was basically about, right? Either it will confirm your thesis or it will reject your thesis, right? Now, how do we technically align with our thesis building is that we start looking at the market at the technical levels from a higher time frame perspective, right? Higher time frame perspective is that you start from the bigger picture. We start from the weekly aspect. From the weekly, we go to the daily. From daily, we go to 4 hour, and so on and so forth. The idea in here that the bigger, the higher the time frame levels are, the most important and powerful those levels are. Now let's go back to the charting platform, because I want to give you guys real examples in terms of why those things are important. One stock that I'm going to discuss to give you guys this example is very, very famous these days, and that is AMD. Let's have a look at what is happening in AMD. This is the area, for example, for now that we are going to discuss, right? AMD was in a very, very strong downtrend, broke out of the downtrend, very, very strong push higher, came back and started basing in this 150 to 155 zone. Now, when I look at this chart, what are the 2 to 3 major takeaways? In fact, let me go to the weekly time frame, right? What are the 2 to 3 major takeaways that I can get away from this chart, right? First major takeaway, when I look at this bigger time frame on the weekly aspect, is that the stock is finding a base in 150, 155 zone, right? Look at here, right? This is the weekly level. This is the weekly time frame, telling me very, very strong move higher, retracement, and basing at 150, 155. Now, from weekly, we go to the daily price action. And when we look at the daily price action, it helps us refine those levels at a deeper level, right? Again, exactly the same takeaway. Whenever the stock comes at this 150 to 155 zone, there is a massive, massive bid. So from the bigger time frame, from the weekly, from the daily, we have one big takeaway. And our big takeaway is that 150, 155 zone is a big demand zone. And every single time the stock came into this area, it got bid up. Every single time the stock came into this area, the massive bid, right? So right when we get this takeaway, I go ahead and we mark our demand zone. And that becomes our structural demand zone coming from the higher time frame. Now again, levels, zones that come from higher time frames, such as these, they are more important and powerful versus levels that come on a lower time frame, such as this level, right? In fact, let's go back to the 30 days. Uh, for example, let's say, just for example's sake, right? 233. Now, if a day trader, let's say, looks at this zone and will say, oh, 233 was bid was taken above 233, so this should be a support level. This is a prime example of retail trader trading every and each support and demand zone, and that's where you lose a lot of money, right? That's where the power of big levels come in, that you need to focus on bigger time frame levels, pay more attention to those levels versus focusing on smaller time frame, right? Now, coming back to this area, 150, 155 zone, big support. Now, when I look at these sort of setups, right away, I'm going back to my journal, right? Let's go back to my journal. I'm going back to my journal and I'm writing it down that, okay, 150, 155 is a big demand zone, and that's what I am paying attention to. In fact, let me actually already go to my my trading journal and give you guys an example. This is the day that I traded AMD, and I'm gonna run through the live examples of the tape later on and what exactly I was looking at when I took this trade. And this is my game plan on that particular day, right? Market context. Market is finally seeing some selling. There is no major catalyst in play. Some ordinary profit taking is happening. Overall, the trend has remained very strong, and my daily line in the sand is about this area on the market. The stock I'm looking at is AMD. 154, 155 zone is a mega structural zone on AMD, and this is the area that I'm paying heavy attention to. Based on this, I have two scenarios on the day. Scenario one, I want to see an initiative buying kicking in, going into 10 a.m. zone. If this area is held, I want to go long on the stock. If this area is not held, I want to go short on the stock, right? So based on the bigger time frame, based on the market context and the thesis, based on the bigger time frame, these are my scenarios on the day, right? Again, going back to our A plus setup, this is where our technical alignment comes in, right? I just want to tie everything back to what we are speaking about. We are speaking about A plus setup, and so far we have covered why trade thesis is very important, why technical alignment is very important, and now let's talk about the next step, which is the live auction, and why live auction is very important, right? Now, coming back, right? This is my example of AMD on the particular day that I traded. I took this particular trade, right? This is my trade on AMD. As you guys can see, as I said earlier, 155 area is what I was looking for. This is the zone that I identified as a very strong zone, right? Now, given that this zone is coming from a bigger time frame, this is a very powerful, strong demand area. And this is also the area where your risk to reward on the trade becomes very attractive. What is the risk to reward, guys? Risk to reward is the following. Let's say, if I am investing $100, sorry, my drawing is just bad. So if I am putting $100 risk on the trade, right, and I make 500 on the trade, that is a 5-hour trade, right? That is a 5-hour trade. Now, getting involved at 155 and putting my stop at 154, right? That relatively is a very good risk to reward versus getting involved, let's say, at 158 when the stock is breaking high of the day and putting my stop at 156. Just imagine those two scenarios, a trader getting involved at 155 and putting stop loss at 154 versus a trader getting involved in 158 and putting your stop loss at 156. These two are just very different risk to reward, where the first trade is very attractive versus the second trade. Now, this is a trade I took based on the game plan, based on my technical alignment. This is what I call my A plus trading setup. When looking at my playbook, this is what I was looking for on this particular day. Very strong volume. Volume signifies activity. the higher the volume is, the bigger the participation is on that particular ticker on the particular day, right? Order book, this is where the live auction comes in. And again, we will have I will run the tape later on this one as well. Liquidity zone, that's the live order book. And again, we're going to have a deeper dive showcasing you guys what exactly do I mean by that. Price, you want to see price moving higher, and you also want to see the volume corresponding to the price moving higher as well, right? Example, if the price moves higher and the volume does not go higher, that is a very, very big red flag. That showcases you that there's a very, very high likelihood that this could be a fake out, right? Point of control. Point of control is basically the prices which are highly accepted in the market. Let's say if at 155, there are 1,000 buyers, giving you an example of a point of control, versus at 156, where there are, let's say, 400 buyers, the point of control is going to be 1,000. Why? Because there are more people interested in buying at 155 versus at 156. So the higher the point of control goes, it tells you that the market is willing to accept that price, right? And then the volume weighted average price, that I think is very, very clear. That is your VWAP, which showcases you how the volume is moving. Now, this is the example of my live trade on AMD. What you guys can see here is on particular day, I'm looking at AMD ticker going into 945. AMD is trading about 145. This is what order book is. This is what we spoke about earlier. That is the liquidity zone. This is what liquidity zone is showcasing me. 154.80, a lot of buyers are sitting. 154, big order block is sitting. So when we are looking at this chart, this is right before the trade kicks in, right? We already have identified confirmation zones for us, right? First, just to recap, we identified that 154, 155 is a big zone coming from the bigger time frame. Looking at the real auction before once the market opens, we already see that in the order book, 154, 155 area, there are big orders sitting in here, right? This is the intention of buyers to get involved in the market. So once again, getting long in here, the risk reward is way better than getting involved at, let's say, 158. This is your point of control. This is exactly what we talked about earlier. The higher, lot of volume traded in this area. That's what all is showcasing you. And again, when the price is showcasing you that there are a lot of people interested in that area, the price migrates towards that zone, right? So what is this chart telling me? It's telling me that a lot of bidders sitting at 154, 155 area. Point of control is trading higher, and this is my time and sales telling me that if the intention of these buyers right here, if this is going to work out or not, right? So this is a very, very classic example of reading the tape. This is a heat map. Once again, the software that I'm using is Bookmap. You do not have to really go for this. You can literally choose any software, any order flow software that you want to use. Again, the idea is that if you can spot those levels on the map, they actually help you massively in identifying the auction and in identifying the edge. Now, if I go ahead and play this tape, right? This is how the trade is unfolding. This is my long zone, and again, I'm going to showcase you my live entries. This is how the tape is trading, right? I actually put it, I'm going to put it at X32, like faster, because my trade lasted for at least an hour. This is where my entry is, 154, 155. Again, I'm going to showcase you guys, and this is how the price is trading. Look at the buying activity that is happening. The bubbles are showcasing you the aggressive buyers that are coming in, and those buyers, they got filled in these prices. Look at the volume that the AMD is trading at. And we get a very, very strong reversal of 154. Again, once again, getting involved in this area and taking a long here, the risk to reward on the trade is way higher than, let's say, if the stock breaks the high of the day, I'm going to get involved in here. And once again, how did we identify that there is a very, very good trading opportunity here? We identified from earlier our thesis, right? Our thesis, our technical alignment. I'm repeating the same steps that we spoke about in our framework earlier. And now we are combining it with the live auction. Three-step approach: thesis, technical alignment, live auction. We built our thesis. Our technical alignment from the higher time frame was at 154, 155 is a big, big zone to where the risk to reward for getting long is a way nicer. And the live auction is confirming that 154, 155 is a big, big area, and we got long right here. Right now, this is again going back. This is my trade. This is my trade. 154 long. This is long, and this is the exit. Right. I hope this makes sense, guys. If you guys have any question, I'm looking at the live questions right now. If you guys have any questions, feel free to ask me, and I will be happy to answer as well. Question: where is your entry? Already explained. Right there is my entry. Now I have these sort of session recordings for almost each and every trade, going through what exactly I was looking for, what was my thesis, what I wanted to see on the tape, and basically take it from there. This is another example of, let's go to next example. Yeah, this is another example of Tesla. Tesla reported earnings the other day. Let me actually go back to my Tesla chart. Where is Tesla? Yeah, let's go to Tesla chart. Now on Tesla chart, Tesla reported earnings just 2 days ago. And this is how I built my thesis around Tesla. The bigger thesis on Tesla, when I look at this chart, what's my bigger takeaway? My bigger takeaway is that after going for a massive run, the stock is consolidating in a very, very tight range, right? So at this point in the earnings call, what we are looking for is some sort of surprise that gives the stock excuse to break out, be it on the upside or on the downside, right? Now that is our bigger thesis. Earnings came and we got one miss and we got one beat. On the earnings call, Elon Musk did not give any major surprise. So the stock actually in the pre-market traded lower. This is how the pre-market on Tesla was. Traded lower, but not very, very weak. And why this sort of price action I would not call very, very weak? Why? Because 420 on Tesla has been a massive demand zone. So in the pre-market and after-market, sellers were not even able to take it below the demand zone and accept the offer below it. That did not happen. Kept on playing with that 420 level. So right off the bat, when the market opens, that 420 area becomes a very, very strong inflection for me on the session. Inflection for me on the session in regards to that if the stock keeps on holding 420 area, I want to possibly get long and get long on the stock, right? But if 420 area is not held and we start accepting the bid below 420 area, then we are possibly looking at some damage on the downside. Right now, again, where is this coming from? This is coming from our thesis building right here. There was no major surprise. Technical alignment, stock traded in a range, but not weaker enough to get below 420 and accept the offer below it, right? Accept the offer below it. And right off the bat in the morning, we are trading above the technical zone, which is around 420 area. Now, when looking at this sort of setup, for me, shorts are off the limit, off the table, off, I'm not touching shorts. Why? Because the stock technically is not giving me the confirmation to go short. It is on the opposite, it is going for scenario 2, which is technical alignment is holding positive, and we will likely go higher from here. And then at this point, guys, this is a very, very interesting fact with Tesla, and I think most of you guys who actually trade Tesla already know that Tesla has a massive, massive short interest, which means a lot of folks are sitting short on the stock. And whenever the stock is heavily shorted and sellers are not strong enough, that becomes the fuel for a short squeeze. So what Tesla experienced on Thursday's session, it was a pure, very, very strong short squeeze driven move, which means all the folks who shorted in this area, they got squeezed like no tomorrow. And that's why we got insane move on the upside. Insane move on the upside, right? I'm gonna go ahead and share with you guys the tape as well for the Tesla trade. And a quick reminder for those of you who are still with me, I hope this is value, guys. And please feel free to hit the like and subscribe button. Don't forget that we will keep on uploading more trade examples, more value on this channel, and I hope this is helpful. So this is a live trade example of Tesla, how the tape traded on the particular day after the earnings. Look at a very, very strong bounce, and look at how the point is trading and how the liquidity is being built up in this particular area. Look how the stock traded in that 417 zone. Let me fill this. Again, I'm running it at a very, very high speed, because if not, this will take at least 30 minutes to sort of play, right? Traded into the liquidity 417. Liquidity gets filled. You guys probably saw that. And a very, very strong bounce with look at the volume. Look at this massive volume. This is pure buying initiative activity, reversal trade setup. Very, very strong reversal trade setup, right? This is another example of how important this is to align your trade thesis with your technical alignment with your live auction. Now, once again, understanding how exactly to read the tape is a big edge, and it's a one complete topic which is going to take at least an hour. So we will do another webinar going through live tape reading and what exactly you should guys focus on in order to read the tape well. But in today's webinar, we just want to focus on the components of A+ trading setup, at least for me, and those are the things that I focus on. Another asset, good example, example of potentially to trade Tesla, what exactly are the things that you should focus on. Another example, I have Tesla. Again, I have tons of examples, live screen recording of my order flow. This particular trade I took, I don't know if I have the game plan, probably not uploaded here. This trade, look at that. And this is my live trade. It's from August to 2023. When Tesla was trading at $250 more or less, right? Now it's at what, 450 is almost. And this is another recording that I have from long time ago. Same concept. The idea for me to showcase you guys this example so old is to focus on the concept of the order flow, right? Concept of the overall idea. Same structure, 100% same structure. Look at the tape. Look at the liquidity levels, right? 253, lot of liquidity sitting. 253.80, 254, lot of liquidity sitting. And look, once the liquidity gets filled, how the stock basically goes for a potential reversal trade. Now again, I've taken this setup over and over again, and to me that is an A+ trade. Now this kept on just go. Sorry, this is actually short trade, not the long trade. This is a short trade. Let's see how that plays out. This is where you have your potential bear flag forming, less activity as we go higher, less activity we go higher, less buying as we go higher. 255 massive volume, sell volume sitting, that's a liquidity, that's also a POC sitting. Hit that, and a very, very strong reversal on the downside, right? Now, this is, as I said, another example of a trade. As I said, we can literally go through tons of examples. Another example that is actually very, very good case study is Intel, which we were going through earlier. And I was going through the tape on Intel this morning, very, very clean tape with exactly the same concept as we just discussed in a Tesla trade. Unable to bid higher, unable to bid above 40 zone. As said, if you look at the bigger picture, everyone is like, okay, Intel reported earnings, good surprise on the EPS or whatnot. It is trading at 41, so 40 is going to be, so this is likely going to trade higher. But when I look at this particular stock, I'm like, okay, pre-market is looking higher, but also the context on that particular day is that the stock has doubled, literally not even doubled, even more, since this big breakout. So at this point, don't only focus on that this stock is going to run, but also look at the bigger context that it is up massively in a very, very short period of time. So also have the scenario that there's a good chance that people will actually also take profits, and we might not trade higher. So with that thing having in mind, 40 is going to be my inflection on the day. That is going to be the area or the zone on the day that I'm going to pay attention to in terms of if we see continuation trade on the upside or if we see a reversal trade on the downside. And this appeared to be a reversal trade on the downside. Now, what we did see on the tape, and that's what I was paying a lot of attention to, is that sellers were not able to break below 38 area. Now, this area is going to be very, very interesting and inflection going into the next week. If this area keeps on getting the bid accepted, we could possibly go for a reversal back to 40s. If we break this area, possible reversal back into this distribution on Intel. Right now, this is again my live plan, my game plan for next week, and I share these game plans every single day on TradeZella Discord, which is free to join. By the way, feel free to be part of the community. So, for example, this is my game plan on Intel. Right, very interesting area to keep an eye on at around 38. So, going back to our initial structure. These are the things that I focus on when we speak about A+ trading setups. You need to have strong thesis, a thesis-driven trade. You need to, and how you build the thesis, you start building the thesis from a bigger time frame. You look at the bigger time frame, you start looking at the macro elements, what information was giving in the earnings call, what information was giving in the forward guidance, if there are any macro things such as Fed announcements, such as economic things that we should be aware of. You start, based on all that information, you start building your scenarios. Okay, this is what I think is happening in the market, and those are the important things. Based on that, you start looking at the technical scenarios. Okay, this is what the price is showcasing on my to me on the weekly chart. This is what the price is showcasing to me on the daily chart. If there is a technical alignment between thesis and the price action, and the last step is the tape confirmation. What you are seeing on the daily live auction. If the price, the way buyers and sellers are acting, if they are confirming the previous steps, or if my thesis is wrong. What you don't want to do is these mistakes. You don't want to trade without having a game plan, without making any sort of thesis. That is literally just trying to catch every single candle. You don't want to do that. You don't want to buy every single support and resistance. And that's where, again, folks lose a lot of money. And you probably have seen that multiple times. And again, I have been there, I have done that. And after learning through all those painful lessons, this is what I this is the conclusion, right? You don't want to focus on every single support and resistance. You want to focus on the bigger time frame structures, because that's where big money is involved, and that's where they come to defend their positions. You want to align all that with the tape. If the tape is not showcasing you what you want to see, there is no trade. If you want to, if for example, if your thesis on the day is long, but you open the tape and the tape is showcasing you a lot of selling, you do not want to become liquidity. You do not want to, just go ahead and keep on buying the dip with the hope or expectation that we will actually at some point reverse. That is the worst thing you could possibly do. And another worst thing that you could possibly do is get long and stock goes lower and keep on adding onto your position. That is the worst possible thing that you could do. Adding on into your losers, because those trades, trust me, end up basically the biggest losers of your month or of your year or whatever the case may be. So you do not want to do that. Focus on one trade, focus on A plus trade, and take it from there. That's pretty much all, guys. This is my A plus trading. This is how I find my A plus trades. This is my A plus trading framework. Again, this does not mean that this is the only approach. There are thousands of other approach. Every single trader has its own way to look at the market. For me, this is what works. And when I say that I'm looking for an A plus trading setup, these are the components that I am paying attention to, and this is what I'm looking for. So I hope this webinar was provided you guys with a lot of value. If that is the case, go ahead and hit the like and subscribe button. Be part of our Discord. It's completely free, and I will likely see you guys there. If you guys have any questions before we wind this up, I'm just looking at the questions. Order flow on TOS. Order flow on TOS is not very good, to be honest. I would not really trust order flow on the TOS because the platform is very, very laggy. It is a good platform for charting, but it is not a good platform for reading the tape. There's a massive, massive delay in terms of the live quotes and versus what TOS is showcasing you. And trading is a game of milliseconds, guys. You do not want to have, let's say, a 10 seconds delay, and especially, let's say, if you're trading options, those delays are going to kill your premium. So you do not want to be do not want to be there. Where is the POC on the book map? There's an option right now. I mean, I don't have bookmap configured here, but there's an option on bookmap where you actually go and turn on the POC. That will appear automatically. If you're still not sure, you should reach out to bookmap, and they will be very happy to help you out. Again, bookmap is not the only software, and I'm not recommending them. You can literally use any heat map, any order flow tool, which actually provides you the information. Again, the idea is not to just use indicator or tools. The idea is that what information that tool is giving you and how you can use that information to make a good trading decision. That's what's all about. Be it bookmap, be it order flow, be it Sierra, be it whatever the case it is, the most important thing is how you can use that information and make a good trading decision. Where can I get access to the same program and volume order flow? I already answered that question. I'm using bookmap. You can also, if you're looking at footprint charts, you can also look into Sierra. They're also very, very good. ATAS is another very, very good example. Why would you use to track order flow on Thinkorswim? I do not do that. What else? Are there indicators for this in TradingView? No, in TradingView, this does not exist, unfortunately, especially as far as I know, maybe if I'm mistaken. There does exist level 2, there does exist DOM, which is more or less the same, but as per my understanding goes, you don't have the heat map option over there. But you can read the same information from the DOM, which is exactly the same thing as said as in the case of any other heat map. All right, what else? Have you not ignoring higher time frames? Very nice. Do you have Discord invite? Yes, the link for the Discord invite should be there. And as said, it's free to join. So no charge, no nothing at all. And we go through all of these things every day in the pre-market. Feel free to be part of that. Thank you, Numan. Thank you from Austria. Thank you, Serena. Thank you, incredible insight. Appreciate you guys. When it comes to backtesting, what are your thoughts on it? I think backtesting is very, very important because it gives you a lot of confidence in terms of if your strategy that you are trading, if it's working or not. The main idea is to backtest and collect data. Focus on the part collecting data, right? If the data is good and your system is showcasing you that it has good expectancy, that means go ahead. That's the entire objective of backtesting, right? Go back, put the data in, get the data, and test your trading strategies if they're working or not. Greeting from the Netherlands. Amazing. I was in Amsterdam actually just some days ago. Greetings. Please advise for available provider and order flow. As said, depending on what you're trading, if you're trading on trading stocks, or if you are trading futures, Sierra is a very, very good platform. If you're trading stocks, a little bit complicated. There are many, many other private brokers which actually provide very, very good access to the tape. Could you please explain how do we get the inflection zones? I actually did explain in the technical part. So this webinar is recorded. It will be uploaded. I suggest you to go back. I think that will help you a lot because we do not want to go through everything again. People will be bored who are live here with us. Invite for Discord. It is already provided. What else? Yeah, that's pretty much all, guys. I hope, as said, I hope this was helpful. And if that is the case, feel free to hit the like, subscribe button, and I will see you guys in the next video. Have a great rest of the Sunday, everyone. Goodbye.